Hey, welcome aboard. It's Walter here, and we're going to talk about a system. There are three things you need, obviously, you probably know this, to make a consistent, profitable endeavor of trading. You need to have a system you believe in, that makes sense to you, that fits your beliefs of the markets, and you verified. You need to have a risk management rules in place that allow you to achieve your goals and avoid the things that you're trying to avoid, namely losing streaks that are too painful to endure. And number three, you have to have your mindset right, which basically comes down to executing your strategy and understanding what you need to do to keep motivated and to keep going and focusing on the right thing, which generally is what we're programmed against. Like, we're not really set up to do that well. So let's talk about this strategy. We're going to talk about number one here, which is a strategy. Let me share this with you, what it looks like and how it works. So this is the busted kangaroo tail strategy. Oh, by the way, if you if you'd like to get more information about how to build an account quickly, you can go to nakedtradingclass.com and learn how to do that. It's really, really simple. There are three things that you'll learn in that class. It's free. You can watch it at any time. It's on-demand training at nakedtradingclass.com. Also, you'll learn about the account that we're growing right now, small account. We're growing it up to 100 grand over 300 trades. All right, let me share with you this strategy. What this is called is the busted kangaroo tail. Now, in the Naked Forex book, you may have read about the kangaroo tail. This one's a little bit different. So this is when traders are looking for the end of a trend. Like, so for example, this is the New Zealand dollar 12-hour chart. Okay, and this is in a trend, and it's been in a trend for some time. One way to know that that's the case is if you look at the open position ratios here. So here, these are the open position ratios for IG markets. You can see here the New Zealand dollar is at currently, let me zoom in here so you can see this better. But currently, the New Zealand dollar, the traders are 76% long. That's how you read that. 24% of the traders are short and 76 are long. What that means is most traders here are catching a falling knife. They see this market going down and they want to buy, okay? So when there's something like a kangaroo tail, like we have right here, what I would typically do is I would look to buy above, as I wrote in the book, and you may know about the kangaroo tail, but basically I would look to buy a few pips above the high here. So right about there would be a buy. Now, here's why this is a bad idea. Number one is we know that the numbers are against us, that there are a whole bunch of traders on the New Zealand dollar who are buying right now. That's bad news. And I'm talking about retail traders here. Obviously, it's very different if you're talking about professionals, okay? So I'm not talking about the commitment of traders report, which is futures, and those are different traders. Those guys make money. I'm talking about the retail traders that largely lose money. They always will go against the trend in mass. So I use that as a bit of a trend indicator. So number one, I wouldn't really want to take this trade anyway, okay? But number two, if I did want to take this trade, guess what would happen? In the book, I talk about how a kangaroo tail, I basically wait about 2 candles most of the time to see if the market has momentum, is going to trigger my order. It didn't. Look at this. Candle 1 did not go above the high of the kangaroo tail, and candle 2 did not go above the high of the kangaroo tail. If I had waited till candle 4, yes, I would have been triggered, but that would have been really a bad idea because, of course, the market eventually falls lower. So a busted kangaroo tail, the way that works is as soon as the market goes below where the stop would be, which is below the tail, this is actually a beautiful candle in and of itself, assuming that we're on a support level, and it looks like we may be, at least on a minor level, given the support over here on the left. It's got plenty of space. It could be a double bottom. All of it really looks great, except for the fact that all of our traders are going long, so we know it's a strong downtrend, and the market never goes higher after 2 candles. So for those 2 reasons, this is actually a poor setup, okay? But now, look what happens. On this candle, we actually trade lower than the low of the candle. This is where the stop would have been. So this is actually an opportunity to sell here. And that's what a busted kangaroo tail is. It's basically when the market prints a kangaroo tail and it never comes good. Here's another one right here. You can see same thing going on. And I can tell you the numbers were still very negative for, in other words, a lot of traders were buying here. We were on support, and this is actually when I started to get excited about selling this pair, because I saw it was on support and the numbers were pretty bad. So you see here, again, if I'm going long here with a normal sort of reversal kangaroo tail, what would I be doing? I'm putting my buy stop up here, and it never triggers after 2 candles. In fact, it starts moving below the 50% mark of this candle. Also, technically, it's not really a kangaroo tail according to the Naked Forex book I wrote, because it doesn't follow the rules in Naked Forex book, because the close here is not inside the previous candle's range. But we do have some leeway here for candles that we call, what I call pseudo kangaroo tails. If the candle prior is really small and has a tight range like this one does, you can give yourself a little bit of leeway. It certainly does close in the top third of the candle, so this could have gone either way. But by the time the market's down here, you know what? I should be looking at a busted kangaroo tail. We've broken through support. The numbers are bad. Everyone's going long, so I want to go short. And you could do that right here. That would have been a viable trade. Again, you just reverse everything on a busted kangaroo tail. You put your stop loss below, or your sell stop below the low, and then your stop loss goes above the high, and you're just riding out the trend. And you will see tons of busted kangaroo tails when the market is in a trend. Here's another one right here. It's very tiny. Well, technically the next candle goes higher, so but the next candle also went lower. I don't know which happened first. If the market went higher or lower first. My guess is it probably would have gone lower first and then higher, most likely, but who knows. So that's what the busted kangaroo tail looks like. Like anything in trading, if you test it yourself and you verify it, then you can make it work. The key, though, here is to focus on the exits. The exit rules will dictate your win percentage and obviously your overall profitability. So that's really where the gold is. The entry almost doesn't matter. So I wish you happy trading. I hope that this helps, and we'll see you in another video. Go to nakedtradingclass.com if you haven't and check out the course. You'll see how to grow an account quickly, and I hope that it helps. See ya. Bye.